Hello ladies and gentlemen, I'm Joseph Novichkov, Senior Trading Manager for GDM, with today's outlook, starting with Japan's consumer inflation. It eased in January for 6 straight months, increasing expectations that the Bank of Japan will have to undertake future stimulus measures to, of course, achieve its target. Now, the consumer price index rose 2.2% in January from the year-ago period. Government data showed earlier throughout the Asian session compared with forecasts for a rise of 2.3% and down from 2.5% rise in December. In other data, household spending for January fell 5.1% from the year before versus the expectations for a 4.1% decline, and after declining 3.4% in the previous month. Retail sales, however, fell also 2% in January, worse than expectations for a 1.3% decrease in results. The yen declined to 119.40 versus the USD. Japanese manufacturers were more upbeat about next month, however. They expect industrial output to rise 0.2% on month in February, above their previous forecast for a 1.8% decline, according, of course, to the Ministry of Economy, Trade and Industry. In the euro area, the European stocks advanced, extending their highest level since July 2007 on better than expected financial results from companies like including Airbus Group. Also, the Stoxx Europe 600 index gained 0.3% to 391.84 this morning. The measure climbed to 1% yesterday, the biggest gain in more than a month, as of course Bayer rose after reporting earnings. Investors will also watch economic data like a preliminary reading which might show German consumer price rose 0.6% in February from the previous month, of course. Now, the euro remained under pressure this morning as well at 1.12 versus the USD before the US GDP preliminary report later today. In the commodity sector, gold advanced for a third straight session on Friday this morning and was on track to end a 4-week losing streak, supported by firm Chinese demand and a softer dollar. However, the gains were limited with hopes that a looming US rate rise would be delayed until later this year, after dovish signals from Federal Reserve Chair Janet Yellen fizzling around out after upbeat US data, and of course comments from other Fed officials. Now, also in the commodity sector, crude oil futures rebounded this morning as supply outage in North Sea and heavily growth in China's implied oil demand this year is supporting the price. China's implied oil demand is set to grow 3% this year, the country's top energy group, China National Petroleum Corporation, said today, surprising the International Energy Agency, which forecasted of 2.5% increase. Still, oversupply worries persist and could, of course, limit oil gains, especially if inventories in the US continue to build. In today's calendar, as usual, at 13, German CPI preliminary report, at 13:30, US GDP preliminary report, and Personal Consumption Expenditures, also a preliminary report. That's all from me for today. Keep on a close eye on the economic calendar at the end of the week. Thank you very much for joining us. See you next time. Bye-bye.